Hello and welcome back to Bunnex Investment Group. In this video, we are going to look at the pairs that we will be focusing on in the upcoming week. We had stopped this particular type of videos and we are actually resuming. Alright, so without wasting much of our time, let's actually jump into our today's video. The first pair that we'll be looking at next week will be pound against dollar. The first thing that we always do whenever we are analyzing is to start on the higher time frame. And for those who are just starting to follow us, we use the institutional market maker method. So in this particular case, this is the monthly time frame, just to have an overview of how the market is actually playing out so that we can get the market bias. In this particular case, we can see that there was this high on the monthly time frame and the market looks like it's actually trending to the downside. So after that, we can see that there was the first impulse to the downside, the second impulse to the downside, and the third impulse to the downside. The first rule of institutional market maker method is after you see three impulses or three levels to the downside, we expect to see a market reversal. How does that market reversal play out? We need to see the neckline of a pattern at the 50 EMA. So for the purpose of those who are just following this channel, the EMAs that you see or the indicators that are on my charts are the 50 EMA, the 200 EMA, the 13 EMA, the 5 EMA, and then the TDI at the bottom part. All these have different uses depending on the time frame that you are viewing them from. In this particular case, we can see that there was a completed cycle to the downside, and after that completed cycle, we can see the first leg being issued, which actually has a TDI. We can see a TDI shark fin on the monthly time frame, which was this one. After a TDI shark fin, we are actually in preparation of the formation of a higher time frame M pattern. Right? So this is actually to bring out the bias of a market. We are not saying this is 100%, but we are saying this increases our chances of knowing where the market might go next. So with that in mind, we are saying the first leg has been issued, retest of the 50 as the neckline, and we are expecting to see the market give us a second leg like that for us to see the market to keep on going to the upside. However, this is a higher time frame, which is a monthly time frame, and this particular move is actually a very big move on the smaller time frames. If we measure the move or the anticipated move, it's around 100 and it's actually around 100 and almost 200 pips for that particular move, which is worth it for us to get entries on the smaller time frames. So with that in mind, our datum becomes this point, or our point of reference when we go to the smaller time frames is this one. So directly we can go straight away to the daily time frame to see what has been taking place. On the daily time frame, this is how it looks like. We had a cycle that started with the first level as this one, right? After that first level, we can see the second level as this one, and then the third level, meaning a cycle was completed. Over the past couple of weeks, we were expecting to see recreation of a second leg of the daily time frame, which is this one. However, the market did otherwise. That is why I've said we always work on probability. So the market is actually in a downward move, as we've seen on the higher time frames, and whilst on that downward move, if we go to the H4 time frame, what has been issued on the H4 time frame counting levels, we can see that a cycle was actually completed. We always say when we fail to reverse at level 3, we expect level 5, right? If it's not a reversal at day 3, it's a reversal at day 5, right? So in this case, we failed to reverse at level 3, so we were going to level 5. This was second impulse and consolidation, right? Third impulse And these are the techniques that I teach in the one-on-one. You can as well sign up for that and learn in depth of how to count these levels. Right, so at this particular case point, that is where we first anticipated to see a drop, a rise or a reversal. Then this happened. So after that, we would expect to see 5 levels in one particular direction, and at level 5 we would expect to see a neckline at the 50 EMA as well as divergence of the TDI. First leg, retest of 50, second leg, and then divergence of the TDI. So we are expecting to get a reset before we satisfy what we have seen on the higher time frame. So basically on GBPUSD, we will be waiting to see buy patterns and then sell patterns. Those sell patterns can be held towards the first leg as I have shown you on the monthly time frame. Another pair that we'll be looking at is actually US oil. US oil is actually a little bit clear on how it's actually performing. As always, we start on the higher time frame to see what exactly is actually taking place. This is the available data that I have just to peruse, not to mark up the charts on this high time frame. We've said the first thing is to actually locate the high or the low that is available. In this case, this is the low that I have or that is in front of me, and it becomes my data. And going to the smaller time frame, probably the weekly time frame, I can see that there was an impulse, right? 3 impulses, reversal pattern, and then we come where we are right now. So this looks like a reset on the higher time frame to me, because I can see the first leg retest of 50, the second leg like that, and I'll be expecting to see the market go, but this is still building of bias. We build the bias with the higher time frame, and then the entries are done with the smaller time frames. That is where we can now say this is going to be held over a long period of time, or this is going to be over a short period of time. On the daily time frame, this is how it looks like, but it's not as clear as I would want to see, because I can see that this is the peak that we've just seen on the weekly time frame. And on the H4 time frame, I now want to break it down to find where I can make an entry, because I've seen that the bias, the crude bias that I still have now, is upwards. So going on the H4 time frame, this is how it looks like. On the H4 time frame, we can see an impulse, another impulse, right? We can see, or we can try to count the levels as the first impulse to the upside, second impulse to the upside, third impulse, fourth impulse, and fifth impulse. At fifth, that is where they made a reversal. Therefore, this is actually a point or a peak of the H4 time frame. After a completed cycle, whilst we still have room for the higher time frame buyers, we can expect to see a reset, right? So this move might be going to the reset point, and if I go to the H1 time frame, this is how it looks like. On the H1 time frame, I can see impulse 1, impulse 2, impulse 3. At this particular point, we expected to see a reversal. However, they made impulse 4, impulse 5. Reversal is likely at this particular point. So how will that reversal come, or how will we validate? We need to see retest of 50 and then creation of second leg, and probably in addition to the divergence of the TDI, right? Like that. We can see the divergence is already being formed. We can see a shark fin, a leg above, and the market is actually going to the upside on the TDI like that. So if they do this, create a candlestick reversal pattern in this particular phase, it will be also a buy, a higher probability. We have a higher probability of seeing buys on that particular asset. Then another pair that I'll be looking is gold against the USD. It's also in a similar phase like what we've seen. On the higher time frame, it actually looks like it's actually dumping from these all-time highs, which are 3 or triple top, if I can say in traditional context. And from that triple top, we can see the market actually going away from those points, right? Going away from those points, we are looking to see this go to the downside. Where can we make use of this particular bias? If we go on the H1 time frame, this is what we see. Actually, H1 is a little bit on the H4 time frame. This is what we can see. From this particular point, we can see there was a reset, another reset. Therefore, on the H1 time frame, we are expecting to see the market to have completed the cycle. So we've said if we fail at level 3 or at day 3, we expect to see at day 5, right? We had 1, 2, 3, 4, 5 days in a row to the downside, right? First leg or first portion of the pattern, retest of 50. Second portion, in addition to the TDI, we can safely say this one is a peak, right? If this one is a peak, it means if we get entry patterns in a bullish side, it will be actually of higher probability. So to summarize everything that we've said pound USD is going to the upside, and we are looking for buy opportunities, as well as US against oil, as well as gold against USD. As we go through the week, we'll be adding more pairs and more looking for more opportunities to get into the markets, and we will be actually validating if there are going to be swing trades or they are going to be short-term trades. It now boils down to for you to learn this particular trading method, and it's actually going for $500 if you are going to take the one-on-one, or $99 if you are going to take the recorded tutorials. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.